Good evening, everybody. Okay, we've gonna making the is red inverted candle a buy signal? Is red inverted candle a buy signal? David, that's my cuckoo clock. One of my cuckoo clocks. They all go off whenever they feel like that one's the closest. Red inverted candle, a buy signal. Robert, is it on this chart? Still don't know which one you're referring to. Anyways, in general. Is red inverted candle a buy signal? Inverted candle, I don't know what an inverted candle is, what you're referring to. Steve, that link probably is in the morning and afternoon comments. Robert, still don't understand which one. Are you talking about an inverted hammer at the bottom? And the answer is no. It doesn't matter whether it's red or green. That you want to consider an inverted hammer, doesn't matter what the body is. It's the upper tail. Okay, we can see the sell signal. We can see when it was occurring or when it was suspected to occur, when they gapped up in the overbought area, closed below the T-line. And then as you can see, anytime they take it up, they're taking it up indecisively, but selling off decisively. So can you make a complete assessment of the market trend by just using one index? Not necessarily. You use all the indexes. What are they doing all at the same time? As you can see, when they tried to do a morning star signal J-hook pattern off the T-line, the next day they negated it, and anytime they negate a signal like that, coming back down through the open of a candle that told us the bulls are in control, that is extra emphasis on the fact that the bears are in control. Then when they start gapping it down, pretty obvious that the selling was taking place. Pretty strong here, definitely on the transportation index. It could be basing, but we don't have anything yet confirming that the buyers are stepping in. So for all we know, we might have a wave 1, wave 2, and then continue wave 3. So you have to see what happens from this level. That's the transportation index. And this is the S&P 500, which today, after a doji gap down, showed they couldn't even support at the 50. Yeah, and the HYG, another indicator telling you they're selling off the corporate bonds, which means they don't have enough confidence. So that's just one indicator telling you the bearish trend is in progress. So this is the logical 2 + 2 analysis. Did I lose the one I want to? No, there it is. So this is the type of chart setup that you can think about going short after they've started gapping down. The stochastic's heading down. It didn't sell off today. Doesn't mean we disregard this chart. Still watch to see if they start selling. Guess they are assuming the worst until Fed at 2 p.m. tomorrow brings more clarity. Are they reporting again tomorrow? I thought they were announcing the consumer price index to see if there's inflation. I would guess that the is it Wednesday? I thought they wouldn't be meeting for another 30 days. And so that's already being built into the market. The suspicion is that inflation is now at 8.5%. Not very much going positive today. Now, this little Mullen, again, a story stock, started to pick up some steam as far as a potential double bottom. And Tank was another one that coming out of the fry pan bottom, breakout from this double doji setup. You stay long, you're in the overbought area. Right now, you set your safety stop at today's low. Just some very simple mechanical strategies to take advantage of when there's likely a change of investor sentiment. So the doji at the top, followed by bearish trading, is a good time to start taking profits. Okay, but the money makers are where you put all your stars in alignment. If the market is heading down and you're starting to get strong sell signals, those are times when you're likely to see some very strong down moves because of the combination. Las Vegas Sands, doji, 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 bearish confirmation, almost not quite a, just confirming the dojis, heading into a downtrend. What did I just do? Carvana. Dang. These people keep calling because Carvana, remember, the bigger the signal, the more compelling your downtrend. And put this in the YouTube today, or the afternoon newsletter, that when he started reversing, the rhetorical question is, do all price moves produce big profits? Not necessarily. But the probabilities of being in a big price move one way or the other is greatly enhanced using the candlestick signal. So this has come from the $35 level. Today it closed at $6.95. So that's been a very good trade, especially confirming the bullish harami, that they were probably coming back to the T-line. Then you can see whether they were J-hooking or continuing. So the emphasis should be on what are the patterns telling you. Now, first of all, you had the doji-doji breakdown, next wave. Bullish harami coming back up. But then when we can start identifying patterns, like that dumpling top, if we took our profits in here on this, you didn't necessarily have to go short until you saw a buy signal and a close above the T-line. In this case, there wasn't anything real compelling. And then when they started rolling it over, we should have started recognizing this dumpling top, making this area a good place to short. And then right now, what are we seeing going on in this chart pattern? Well, we've got wave 1, wave 2, wave 3. Now wave 1, wave 2, a little possible bearish J-hook going into wave 3. So I always reiterate or emphasize that There are going to be stocks that are going to go down in a down market. But we've got the capabilities of identifying which stocks are going to go down with a lot more strength based upon a candlestick pattern in a downtrend. So we have things like DWAC, where you can see there's a dumpling top setting or setup. We have something along that same lines as a dumpling top, an AMRC. So the patterns work with much more resiliency than just a downtrending stock in a downtrending market. So here's PubM, another one where it's starting to roll over. There's your bearish Harami gap down. The T-line now acts as a resistance level versus or they can't get up through. So I'd still be shorting this one with the expectation, that this current downtrend implies the overall sentiment is bearish. Where's your next likely target? Down into this area. Same scenario on AFRM. Even though it traded positive today, still implying that every time it comes up and hits a resistance level, in this case the 50 and the T-line, the stochastic's still not in the oversold area. More than likely you're still heading down. VLRS, same scenario. Look where the bearish Harami occurred, right at a level everybody else is watching. This one still could be shorted with the expectation of coming back down into this range. Western Digital, look at the failure. Hanging man, bearish confirmation, failure right at the 50. Where's the expected target? Right down in this range. So I say probably down that range. That's the likely target. That's what everybody would be watching. But the most important factor is, what is the chart telling us? Is there reversal signals? And Unity, bearish Harami gap down, not in the oversold area, more than likely still more downside. And when we see the biggies being sold off, I mean, that's the ones that everybody's playing. So if they're selling off the biggies, that means there's a lot of bearish sentiment in a lot of the traders out there. As you can see after the evening star signal on NVIDIA, and then a close below the T-line, they're gapping this thing down back to the first target area we would suspect, which is down here. Maybe one more day to the downside and be a little bit more diligent as far as watching for buy signals at that level. Same scenario on this one, ACCD. Look at where your evening star signal occurred, closed below the T-line. Now they're gapping down. First target right in here, second target in that trend. ACAD. Evening star signal at this level. Where's your next likely target? So a great advantage we have is being able to see what everybody else thinks prices are likely to do or move to, because of witnessing where the trends are and seeing where the selling started based upon candlestick sell signals. Apple didn't hold at the 50. Where do you think the next target is? The 200. Amazon failed at the 200. Where's the next target? Wee little teeny gap right there. And Tesla, bearish Harami gap down. Where's the next likely target? So the most important factor is in the overbought area, we were seeing actual sell signals. And then what confirms the sell signal? Something that's telling us they're moving in the direction of what the sell signal is telling us. Or even more so, they gap it down in the direction that the sell signal tells us we're moving to. Okay, so there's not a whole lot of bullish trading out there. You got some J-hook patterns. Ping is a J-hook pattern. ZYXI has a little J-hook pattern coming up through the 50 with a McMuffin. Morning star signal followed by a doji sandwich. ABEV, nice J-hook pattern coming off your hammer signal. And Forge, J-hook pattern. I guess this was setting up for a J-hook pattern earlier, but again, notice this signal right here. That's a strong evening star signal followed by a doji sandwich. What's the implication? Right now, there's a lot more downside. RS had a nice uptrend, but where do these uptrends end? When you see a strong sell signal. There's your bearish left-right combo. So if I was long and this opened lower, I'd close it out. But what do we watch for at that point? Watch to see what it does at the T-line. If it starts bouncing up as a J-hook pattern, you can always get back in. If it goes through, now you calculate where your next target might be. MDVL, good breakout. So this is your rare process. See the breakout, kind of a kicker signal. This is where you go back and you see what the news was that created that strength. UEC, another little fry pan bottom breakout through this level. Wave 1, wave 2, now going into wave 3. And LPLA, wave 1, wave 2. Now what's the convincing aspect of wave 3? The fact that when they pulled back, they did it right to our T-line support and started back up. What would be the expected move? This move. That's taking you way up here somewhere. So these are the type of patterns that the first criteria you want to learn is what are the signals, what are the patterns, and then this is kind of alluding to the fact that if you want to maximize your profitability and are trading options, what type of strategies you put on here. This is what we're going to go through on Saturday, not this coming Saturday, Saturday the 23rd, that we might be buying calls right here. And then as it starts moving, the risk obviously is getting a little bit better. We're expecting this type of move. Maybe we're buying some spreads up here with less money exposed, but if the move does what we expect it to, the rate of return will be excessive. So those are the type of things that you want to start getting acclimated to, is not only identifying where the probabilities are of a price move, but how can you take advantage of that with as much leverage as possible. Obviously, in this case, what is the pattern? Oh, magic. What is the pattern for that? Yes, can you not see a J-hook pattern setting up? J-hook, but something else. I'm lost. Magic, you've lost me. Don't need anything else. There's a J-hook pattern setting up. What do we know about the J-hook pattern? Wave 1 and wave 3 are usually the same magnitude. So I'll ask this question again. Have you read your high profit candlestick pattern book? Not so much a cup and handle. No, a cup and handle is usually a big rounding bottom and then a little cup. This is more of a V shape. So the reversal is a reversal, but now you have wave 1, wave 2, wave 3. So it doesn't matter what you want to call it. This is what you should be analyzing over here, the J-hook pattern, abstract art. There is a doji gap up at the start of the J-hook, yes. So that's a little bit more added confidence that wave 3 is now in progress. HAE, there's your evening star signal. Now, an evening star can have either 1 day or 2 days of indecisive trading, and then that day closes more than halfway down that candle and closes below the T-line. Where do you think the next likely target is? Right back here to the 50. So this is, again, identifying a reversal signal and then seeing it being confirmed by the fact that they can't get back up above the T-line. This is not a difficult analysis. See a bearish engulfing right at the 50. They gap it down the next day. Where's your targets? Target number 1, target number 2. See if I can. Make it even smaller. Or wave 1, wave 2. Wave 3 could be substantial. OVV. Well, I'm hitting something here that's bugging the heck out of me. There's your little double doji setup. So what they do, they came down, they consolidated, but failed to get above the T-line. Next target is probably the 50. Now, is that a big percentage move? Not huge, but the probabilities are pretty strong that it's going to move here. So how do we leverage that? Well, maybe we do a put spread using maybe somewhere right in here and here. That would improve our rate of return. Oh, I hope this is right. And so this one, I think this is the right symbol. Oh, this is what I was looking for. Right here. What's that tell you? After a series of dojis, there's a change of investor sentiment. So you're probably going to see in the options area, well, what have I done? I've done the wrong one. That's why. Here I was going to just, so look at that one. Just now closed below the T-line. If this opens lower tomorrow, what can we expect? A pullback somewhere. Now this is where you can use everybody else's technical trading indicators. What else could we put on here after a big strong up move? Well, maybe we throw the Fibonacci numbers on here. and say, all right, we use this point and that point, maybe here, or here, or here, or here, or here, or here. It's not that we're looking for them to move to one of these. What we're looking for is a buy signal that may occur at one of these, and that would tell us that's where the pullback has ended and we take profits on our short position. So that's why the important factor is the candlestick signals themselves. Then we can add anything else to the chart that would confirm where a price is moving. On an uptrending stock like PAX, do we normally test the top again? Not necessarily for a while. Now there's a truism, just a normal truism of price movement. Let's say it pulled back here and started back up. What would we expect for the uptrend to continue? To get back up above this level. If it came here and started back up and right about in here did another sell signal, what's that telling everybody? They aren't getting up through this level, they've fizzled, that's when the selling starts. You can see what happened over here on the NASDAQ. Nice strong uptrend, pulled back, started back up, but then they had a sell signal telling you they failed to get back up to this level. That means they gave up the ghost. The sellers were in control. So when you see this type of setup, if they can't get up through this level before another sell signal shows up, that means they're not taking it up. And they'll probably start bailing out because they can see that it wasn't going to a new high level. IONQ, would you short here with the stochastics almost in the oversold area? You would if you can see what the see what pattern is setting up. Kind of your wedge pattern. And they broke through the bottom of the wedge. That would imply there's a lot more downside. Vapo, kind of that same scenario, except let's get rid of them. Remove trend, remove trend. You can pretty much see kind of had a trend wedge that broke to the downside. So this is what you like to get stuck in. Notice when they failed this kind of this wedge, they did it with a little slow curve and then that slam to the downside. AMC, geez, all these things. This is the signal that told us they weren't going up anymore. You can see it heading down. This was the signal. What the heck? This was the evening star signal that told you they were starting to head down. How far were they going to head down? Well, maybe they were going to do a J-hook. But the fact that when they took it up and couldn't confirm it, that told us we were still in a downtrend. So there's your hanging man, hanging man, hanging man. This opens lower, first target, second target, third target. And again, you can throw your Fibonacci retracement numbers on here. 1 target, 2, 3, 4. We're all the way back down here. So again, we're putting things on the chart not to use them as target areas, but to see where the buy signals start coming in, and if they're doing it in conjunction with a level that everybody would be using to start buying. So that's all we're doing, is seeing where, if we see a buy signal, is it being confirmed with a with what everybody else is watching. Let's see. These are the ones you really get extra confirmation. A failure at a level that everybody else is watching, and then we can see the gap down, kind of bearish doji sandwich. Usually look, they're heading in the right direction. Do you usually look for a 50% retracement? No. Don't look for anything. I just look to see where the retracement levels could possibly be, and then I just watch to see if there's a buy signal that happens at any one of those levels. I'm not looking for any particular level or a support level. I'm just looking at those as being the possible places where reversals could occur. So on this chart, where would I suspect there'd be the first support level if I shorted it up here? Well, that's one level that everybody would be watching to see if that is acting as a support level, or two, down here in a downtrend trending channel. So I'm not looking for them to go to those levels. I'm looking for those that, if they go to those levels, what type of signals are created at those levels? Well, for crying out loud. So there's your dumpling top. And what's happening over here at this part of the dumpling top, just like a fry pan bottom. You can see how the force is starting to pick up steam. They didn't hold this level. They gapped down through that with a bearish best friend. That means that's where the force might be starting to come into play. My handwriting is getting worser. There's a dumpling top. With the additional confirmation, they couldn't get up through the 50. Start looking for a sell-off here. And there's your gap down through the 50. Kind of your first target somewhere in this range. I could draw that. And if it breaks through that level, wave one, wave two, going into the next wave to the downside. Okay, so with the market heading in a downward direction, let's make this bigger, and let's get rid of the This is why I always kind of smirk when I listen to these talking heads on the financial news station. I don't know if they get invited on there to make sure that everybody's not scared, or they're gonna push away viewers or customers to watch that program. But you hear every single one of them saying, "Oh, it's pulled back, it's over." Some of them are oversold. We're going to start buying the high techs again because we think they're priced very well. And I look at the chart and say, what the heck? There's nothing on these charts. So I tell you that the buyers have stepped in. So this makes the assessment so much easier. When you can see a downtrend, we know things below the T-line, still tells you you're in a downtrend, and we don't see any buy signals, and our stochastics are still heading down, it's a lot more comfortable just to sit with a short position, knowing there's, and it gets rid of that anxiety factor of, boy, I've got some good profits. Should I take the profits just because I have profits? No, you want to wait to see what the total price move is going to be. So right now, you want to stay predominantly short or get into the short funds. But until we see something that changes investor sentiment, we just have to assume this downtrend is still in progress. And let's take a quick gander here. Nope, the YM, the Dow futures are down 8 points. They're usually for the short sectors, like Labu is an ETF for the bullish biotechs, but it's heading down, which means the short fund of that, LabD, is heading up. So if you're not comfortable with shorting stock, but you think things are heading down, there's enough things in the, let's see, not dust. Oh, that's the gold miners bear fund. Whoops. AK22. Oh, gold is starting to come up a little bit. Yeah, you got the SQQQ. Yeah, so there's all all that other people put in short funds that they're familiar with. Yeah, this is a small cap bear fund. You can see it's heading up, which means the small caps are heading down. In the NASDAQ, how do you call the sell signal that negated the J-hook pattern and started the current downtrend? It wasn't so much that it did a sell signal. What it did do was, anytime you're in an uptrend, in this case the stochastics were already heading down, but if you were looking for a bullish move and they came back down through the candle that told you the bulls were taking control, that negated that candle that the bulls were taking control. With it closing back below this level, that was a good indication the bulls were not in control, the bears were still in control. Now, that in itself is a good, strong sell signal, but you also want to apply, well, the same thing happened over here in the S&P 500. At the same time, in this case, after the big sell signal, they came back down to the T-line. So even though it wasn't a true sell signal, it told us the information that we needed to know, that the buy signal was negated by coming back down not only below the previous day's open, but they closed it back below the T-line. Okay, so what we're really looking for is, when we do our Saturday session, there's going to be people that are looking at this chart and say, can we still short Apple? Well, the place to short it was in here. So it's already on its way. So what would be a good strategy to take advantage of the fact that it might still go down more, but it's at a higher risk because it's already moved pretty good. Well, this is where you might put on a short or a put spread. So you've got less money exposed to the trade. And if it continues in the direction, the rate of return on that spread is going to be extremely high, much better than just buying puts here. You might have bought puts here, but you might be buying puts spreads over here. Where was the one? Oh. Whereas something like this might be more apt to just buy the puts because it looks like it's got a lot of room to the downside. Now, if it moves down here and still looks like it's heading down further, now I might change the strategy to something more logical like a put spread. So again, all these steps are making sure all the stars in alignment. Obviously, you don't want to go aggressively short on positions if the general market looks like this, because that means that maybe there's not going to be as much selling pressure in a stock in a short position. So what would we be looking at over here? We've been looking for the strongest bullish chart patterns to take advantage of the fact that the market is probably heading in a bullish direction. Right now, what's our assessment? Market's probably still heading in a bearish direction. Okay, so is there any general questions on candlesticks? All right, is there any general questions on anything? Your love life, menus? All right, I guess if not, Jim, go ahead and do the double line. And in 2.8 seconds, do the next double line. How best set stops for profits? How best to set stops for profits? By picking a level that a price should not be moving back to. So if I was shorting, let's do it this way. If I was shorting this one tomorrow as it was moving lower, I wouldn't want to see it. I'd put a buy stop at the T-line. I wouldn't want to see it close back up above the T-line. That would tell me we're not in a good downtrend. CYTO, you get ready to buy this if it opens positive. You go back and see what the news was. Same scenario on this one. I thought I saw the news today, but I don't remember what it was. NUWE, this one you get ready to buy if it opens positive. Now the next target would be back up toward the high. And ABEV we did. Nice J-hook pattern. You could be buying this one. Agro, nothing here. If you're long and it opens lower tomorrow, close it out because you can see you're still stuck sideways. If you're thinking about buying, wait for it to break out through this level, telling you that's not acting as a congestion area anymore. HYMC, that one you could buy on positive trading. Obviously in an uptrend, uptrending channel with a bullish engulfing, now a doji sandwich potential setup. So you could buy that one on positive trading, but don't let it close back below the T-line. NTNX, bullish engulfing. If you're planning on buying this one, you want to make sure it gets out through this level pretty quick. RS, that's a nice pattern setup. with the 3 dojis sitting right smack dab on the 50. So that alone should tell you there was lots of indecision in the oversold area right at the 50. That becomes a higher probability trade setup. AGMH. Oops. And nothing wildly exciting. You do have a fry pan bottom, kind of a J-hook pattern setup. If you're long, stay long, but it needs to stay up above the T-line. INDO, nothing. Oh, short, Nicholas, yes. If you're short, you stay short. If you're thinking of going short, get rid of those lines. I would suspect your next target, well, let's see, whether it filled this gap, but I would suspect your next target is back to the 200. Marvell, stay short. Just now be more conscious of the fact that you're getting toward this level in the oversold area. Right now, though, I'd stay short. The cat is a pest. I'm surprised she's not here bothering. Dollar Tree. J-hook pattern, you stay long on this one. Why not a BCS? A BCS. A BCS. A BCS. Jim, I don't know what a BCS is. This one you have to trade off the news and off your 10-minute chart. AMAC. Just stay short until you see a buy signal. Kind of watch that level. Here was one that the other day when we were talking about it in the chat room, the fact that they came back and closed below the 50, which was also an indication well. There was needed to get up through the 50. This one I would have been out of today. There's nothing there. They pretty much told you they couldn't get up through the 50. Tesla, you stay short. Moss held up reasonably well today. That sector held up well, not anything spectacular, it just held up well. Conoco, nothing. You should have closed this one out. Absolutely no direction at this point. AMGN. Yep, there's your shooting star bearish left-right combo. If this opens lower tomorrow, take some profits. Freeport, there's your bearish double doji. If this opens lower, suspect you're going to the 50-day moving average. There was your little gap up type signal. If this one opens lower, they're at least coming back to test the 50-day moving average. Nucor. You can stay long, but it better open positive and trade positive. Keep your safety stop below the T line. It shouldn't come back through that level. Occidental bounced up, what is today? Monday, on Friday. But that kind of negated it. I would have closed this back out today because now you have a nothing chart. Whoops. That's a nice kind of rounding bottom, fry pan bottom, stay long. Watch to see if they can get up through the 50. This one you can go short with the expectation they're at least going to come back and test the 50. Cisco stays short. Let's make this smaller. This was kind of a nothing chart until it kind of broke this support level. Now look for a wave 3 to the downside, or at least you got better prospects of a wave 3 to the downside. Gold's nothing great, very slow uptrend, but that's the best you can give it as a slow uptrend. U.S. Steel, nothing here right now. Would not be long or short. And Halliburton, if you're long, it has to stay above the T-line, but it doesn't look like it's anything real compelling in that whole sector. Same thing on Shell. I would have probably closed this one out today just because there's no great movement to it. You're in the overbought area. What long pattern would you equate to an inverted hammer in the oversold stochastic? Jimmy, I don't understand that question. What long pattern would you equate to an inverted hammer in an oversold stochastics condition? I would equate it to an inverted hammer signal in the oversold condition. I don't know how else to answer that. I don't understand what the question is. Oh, what short position? The inverted hammer in the oversold area is the same as a hanging man in the overbought area. So, Jimmy, have you read your high profit candlestick patterns book? This one started bouncing back up. It's got the prospect of a little double bottom. We want to see if they can get back up through this level. We did Veru. Veru, you look at your 10-minute chart. Las Vegas Sands, stay short. Caesars, stay short. Now that is the potential of an inverted hammer, but you're not quite in the oversold area. I would just say that was an up day that failed. But if it happens to open positive and trade positive, that would tell you they are supporting at this level. Oh, inverted hammer possibility, yes. Is that the same question for Las Vegas Sands? Not really. Bear, cow, SP. Bear, cow, SP. Bear, cow, SP. Jim, you got me there good. You can stay long on FMC, but it wasn't a great signal today with that bearish engulfing. So you stay long, but keep your safety stop below the T line. FCPI. FCPL. Nope, that one's not working. AutoZone, another bearish engulfing signal. If this opens lower, they're coming back to test the T-line. Bank of America, not a very exciting trader. Right now, you stay short, but you also have the potential of an hammer. I'd use today's high as a stop. Nothing on this one. No direction. Yeah, I'd be someplace else. Leon. Oh, did see if Jim just put the link in for, yeah, go to the store. They're a lot cheaper on our site than they are on Amazon. That's a good short. Make sure your volume is good. Beam. If you're long, you can stay long. At this point, if I was going to go long, I'd want to see it come up through there. That would give you kind of that bobble breakout scenario. MGM. Another one that if this opened positive and I was short, I'd cover the short, but I wouldn't be going long. Sam, Jim will post the link, and it usually gets mailed out sometime tomorrow. Bearish call spread. Oh, now I forgot what the question was. Oh, that if you're going to trade this one, the first thing you want to do is see what the news was that created that move. The next thing you want to do is go to your 10-minute chart. Now, I think we illustrated, well, this is a good illustration. If you have a big price move like this, big move, big move, big move, and then where is your first sell signal? Right here. I'll usually take profits right there, because that's the first level that the bullish strength got hit with bearish, bearish equilibrium. Then you can see what it did after that. Pretty much went sideways. So usually that first sell signal on the big price move is where I'll take profits. Will I get back into the trade? Yes, if it comes back up through that area, say did a J-hook and started going again, yeah, you can always buy back in. But the probabilities are that if you see that strong or you see a sell signal after a strong price move, look at all the other factors. Look how far away it started moving from the T-line. But this is the probability of what it will do once that first selling comes in. So if you're buying this one tomorrow, you want to watch your 10-minute chart, which means if your daily chart shows that it's opening positive, then you flip to your 10-minute chart. The British comedy show, there you go. Nothing wildly exciting, Walter, other than you just stay long as it stays above the T-line. And UNH, look at all the clues on this one. They gapped up in the overbought condition. Where do most people buy? They buy exuberantly at the top. Where would you have set your stop? At the open of that day. If it came back down through there after gapping up in the overbought area, the sellers have taken control. Oh, we did those early. Amazon, stay short, and Tesla, stay short. Oh, new COVID drug. All right, that's right. Closed at $13.95 after hours. So it closed up here. All right. All right. Market's still not showing any strength. Again, I always advise people you don't listen to the talking heads, because very rarely are they right. I guess like the old blind pig can eventually find an acorn every now and then. Most of them are wrong. What is actually telling us what's going on in the market is the charts themselves. So if you just use our probability indicators, as long as they're right now below the T-line, stochastic's not in the oversold area, the assumption is we're probably in a downward direction. Okay, we did that all in about an hour. So with that, let's see, silver starting to come back up a little bit. Soybeans, not doing too much of anything. Lean hogs, not doing too much of anything. Live cattle. So right now, repurchase plan, a good reason to go long on ZY XI. It's not the reason, but it is doing the McMuffin. So you're not buying the reason, you're buying what the chart is telling you everybody else is thinking. And one more, BX, stay short. Okay, everybody. Travis, I don't know what that is. Oh, if that's one of the Forex, I don't know enough to, because I don't trade them, to bring them up over here. Yes. So if you're buying, what was it? Yeah, so if the buyback plan is what they've announced, and you can see they're doing a buy signal that's pretty strong, yeah, that's telling you that the buyback plan is what's moving this stock. If they had a buyback plan and today it traded down here as a bearish candle, that would have told you that buyback plan isn't worth very much as far as the bullish or bearish movement. Okay, everybody, we will see you bright and early tomorrow morning. We'll see you then.